Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776, guys. It is me, Mr. Curve. Man, what a crazy 3-day trading here. We did a video on Sunday to let you guys know the week ahead, and now we're doing this video here. So many things have transpired over the last 3 days. A lot we'll go through. This is the main page here, guys. Ahead of the Curve 1776. Me, Mr. Curve. Please watch and like, comment, and share. Subscribe in each one of the videos here, guys. Also, we got a new little feature here, the join button. That is $5 a month, guys. You cannot beat that deal here. You'll get first level for the member shoutouts, also priority replying, as well as ticker and instrument analysis. I did add that there. So, you know, if you put something up there, we'll talk about it on the channel and we'll see what my thoughts are on that instrument or ticker. Also, let's go on over to my Patreon here. I do have a Patreon here, $5 a month as well too, guys. It'll basically be kind of the same thing as the other channel, because guys, we do need these funds in order to grow the channel. Each and every dollar is pivotal to make sure that we are growing the channel to be what you ultimately will need it to be. A definitely informative video on the financial markets. Also the VIP, I will be giving more trading insight on the VIP. You know, like today, I did do a post today talking about Tesla. Kept it general, but for the VIP members, I will probably be a little bit more specific as to what I'm getting involved in. And again, all of this stuff is for entertainment purposes only. Even the posts are entertainment purposes only. Please do your own due diligence and look and talk to a licensed professional before engaging in any of this stuff, guys. Make sure that the risk to reward ratio makes sense for you. But please, guys, please join my page over here and also get yourselves over to the Patreon. Today, if you'd have looked at one of my posts, you possibly could have got into a certain position and possibly could have capitalized. As long as you did the proper due diligence and talk to a licensed professional. But again, guys, I will be having these on my pages here to kind of separate me from everybody else, so that way you can kind of get a little bit of what's going on. Again, guys, I am a current day trader as well as long-term investor. I am in these markets every day. I trade everything from Forex, commodities, cryptos, the dollar index itself, stocks, ETFs, bonds, etc., guys. So I appreciate you guys joining me. If you're new to the channel, I know I ran on a little bit here, but I had to show you guys those are the pivotal parts of the channel. If you're new to the channel, we talk about everything from economic data, monetary policy, politics, and market and trading strategies. So let's get to the data, and let's get to the money, and also let's get to the markets. Also, guys, real quick, the links are up here. Patreon, we got Robinhood, Webull, FX Choice, and eToro for cryptos there. Let's get over there. So we did kind of have a very muted week. I told you guys overall I would not be trading this week. I did do some what's called demo trading just for a prospect of kind of being in the market. So I'm kind of keeping my pencil sharpened, and I'm also making sure that I'm still liquid, still agile, and making sure that I can get in and out and keeping that mindset sharpened, because you do need to do that. Even when there's not a lot going on, you need to make sure you're constantly stacking cash, getting your strategies in order, and putting your strategies to use, even though you might not be trading actual capital. You don't always have to trade real capital to get yourselves in the game. You can trade a demo account. You can do what's called paper trading, right? You can do some research and homework on your own to make sure that you're up to speed, so when it is time, you know, the famous saying is, you know, if you're already ready, you ain't got to get ready. So if you stay ready, you don't have to get ready. So we scroll down here, guys. We pretty much had a couple of manufacturing index PMIs that dropped. We had Japan's as well as Australia, and also China. China had their tomb sweeping situation going on, so not a lot of liquidity coming from them. They had the tomb sweeping day, and that was observed, I believe, for 2 or 3 days. Then we had the CPI for the Swiss there. It came in lower than expected month over month, which is pretty good. They are cooling off, which is nice to see, because we do want to keep that purchasing power very high. Scroll down, we had the OPEC meetings. The result of the OPEC meeting was a shaving off later this year of 1.16 barrels per day, which was in hindsight inflationary, that did jump out, and we'll get to that later in the video here. But we shot up WTI at roughly about 6 or 7% to start the Asian trading session on Sunday. Then we'll scroll down here, guys. A litany of PMIs obviously dropping there for the Eurozone there. We had French, German, right? All lower for the most part in totality. Below that 50 mark, you know that 50 mark and above is expansionary. Below that 50 mark is contractionary. So we definitely have some contraction going on. Again, that OPEC meeting. We also had the ISM manufacturing PMI. Now, I will tell you, manufacturing is such a small part of the U.S. economy, but it is pivotal as far as the numbers are released. So 46, we were looking for 47.5. We got a 46.3. The ISM pricings, that's actually had a way higher gauge than actually the PMIs itself, manufacturing PMI itself. So we still had a softer reading, 49.2. So we are definitely getting what the Federal Reserve is looking for, softer, weaker, lower numbers overall. We had the Wards total vehicles, 14.8 million vehicles there. We also had Canadian Bank of Canada Business Outlook survey that dropped as well. 2 medium indicator there. Basically, they were just saying more of the same. It was a softer reading. They will have to wait and see. Outlook is definitely a little bit spotty here. We also had the Japanese monetary base year over year. Now, this is the truest form of inflation, right? Inflating those dollars away. More dollars in circulation equals inflation. They had a negative reading, and they have had negative readings for a little bit here. I mean, they are a deflationary environment. So I'm not shocked by their reading. We also had the bond auction. We had the spot 4.6 on the 10-year, 3.8 bit to cover. Scroll down here, guys. We had Australia's bank interest rate decision. Basically left it the same. It was supposed to go up from a reading that I seen before when I was watching this for the week prior, about 25 basis point, 0.25%. But they kept it the same. And they definitely did harp on the fact that this is a pause. They cited, several banking issues internationally, so they are definitely pausing. And then we'll scroll down, guys. This was the pivotal moment for this week, because technically how it played out, there was only really 2 trading days. We had basically, Monday and then Tuesday. After that, we didn't really have a lot of volatility. So basically, we scroll down here at the JOLTS job opening, guys. That was huge. That indicator was typically a medium. A light indicator, I believe. Yeah, and then it basically jumped up to a high indicator. So we want to see how many job openings are there, which will translate to how many job hirings are there and how many job layoffs could potentially be coming down the pike, right? Everything is empirically, delayed. So we need to see how it looks. So 9.93 was the number that was actually came out, expectation of 10.49 million. So that is definitely over 500,000 off of that number for the month over month, which is huge, guys. I mean, that's huge. That means less job openings, less dollars being spent in other people's pockets, which means that less money that they're able to go out and put into the economy. We also had factory orders, which is a pretty light indicator, but it is a monumental data point as well too. We also had the IBD tip, economic optimism, below that 50 number. So we are definitely looking at a softer number there. Then we scroll down, guys. We had a couple people speaking. Scroll down to the New Zealand interest rate decision. They did go up higher than expected. We were only expecting 25 basis points. They went up 50. But this was a very dovish hike, and this was expressed through the press conference as well as the statement. This is basically probably where they're going to fall. And again, guys, I've said this several times, 5.25 on that interest rate is about where they stop, especially from the last tightening cycle, right, prior to the emergency cuts. But they kept it about 5.25. And again, most of the time, most of consumer interest rates are anywhere between 2 to 3% higher than that on average, even for prime credit. So 5.25 here might be 7%, 8% for a 30-year mortgage, right? Conventional, or maybe a nice car, brand new car, 2 years or newer. We're looking at maybe 5%, 7%, guys. I mean, that's pretty much where it falls. We'll scroll down here. We have several more PMIs for today. Again, a high indicator ADP. We are keenly focused on the employment situation because we got the price stability part kind of down. We're getting getting that inflation back towards the, I want to say 2 to 3% range, even though they want it to be 1 to 3%. We're going to get more towards the 2% as it's lessening. That's the trend, right? It's on its way. Is it there? No. Is it expressed in every industry? No. Is it expressed also, via things that are excluding the CPI, food and energy? No. But if we scroll down here, we got 145, 208 was the expectation. So definitely a huge miss there. We're looking at about 50K off of that. So about a $500,000 off the jolts, and then we also had 50,000 off of this, so it's a pretty big slowdown here. We also got the ISM service PMI 51.2 hanging its neck slightly above that expansionary threshold there, guys. We also had crude oil inventories. We're looking at negative 3.7. That is inflation, not having those barrels on hand, which means that it will cost more due to supply and demand, right? So we scroll down here. I'm recording this video in the evening here, so we'll be entering into the Asian session for Thursday, and we're expecting a little bit of China news. These service PMIs for China definitely do move the markets after that 9:30, 9:45 hit there, and then we also got the 30-year bond auction. We'll scroll down here. We got Canadian employment tomorrow, as well as look at that high indicator for unemployment claims. We are looking for the reason why they make this high. They need to see the cool off period. We need to see people getting laid off. We need to see people getting severances. We need to see the liquidity drying up from consumers, which will ultimately mean they have less dollars to pay, which means they have less, they're getting paid less dollars, means they have less dollars to pump into the economy. We also have the observation for Good Friday here from New Zealand, since obviously this will be going into Friday, so theirs is during the night, New Zealand, Australia. And then obviously, guys, we have Good Friday for a few more G7 members here as well, too. We got the UK as well as the Eurozone for the most part. Then we have the employment situation, guys. We will take a look at that, even though a huge part of liquidity is from the Eurozone and the UK. The US will, I guess, still be trading, but nobody will be in the markets, guys. Today is pretty much the end of the road for this week, guys. And that's why I told you got to keep some cash on hand, right? You got to keep some cash. Hold on to the cash for a minute, as the thumbnail says. You got to make sure that you're holding on to cash. Capital preservation is the #1 trading strategy for everyone. That should be your first and foremost thing, because knowing when to trade, when not to trade, how long to trade, and what you're trading, right? The 4 pillars of trade. You scroll down here, guys, we're going to be also looking at that consumer credit. I expect that to pull back a lot as well, too. Look at this. We've had huge misses off of that, forecasting over 25 billion for the most part, getting lower and lower and lower numbers, guys. So I expect this to maybe be about 8 billion, maybe 9 billion once it comes out. Just because between that banking debacle as well as the tightening, guys, I mean, who's going to be taking out this expensive credit? Not a lot of people. And again, we will fully recap the week and the week ahead I believe I'll record it for Saturday, because obviously we will have Easter Sunday. I do observe that day. Happy Easter, everybody that's out there. I know there's a lot of people who celebrate it, who don't celebrate it, but I do celebrate it, so I do appreciate each and every one of you guys. And just make sure you guys give thanks for everything you have, and just make sure that you're doing what you think is best. So let's get you guys now over to the most liquid pair, Euro/US dollar. We got to talk about a few things over there. So we'll go out on the 1 hour chart, guys. A lot of craziness happened that I didn't expect. I didn't expect the dollar to kind of take a little bit of a beating this little bit of a half of a trading week. I thought actually the dollar would get a little bit stronger due to the lack of people being in the market, but no, with those softer economic numbers, and I did say there was a possibility, those softer economic numbers definitely weakened the dollar substantially. We actually were trading out to start the week around the, scroll back here, starting out about the 109. We pulled back a little bit, thought maybe the trend would hold, right, coming into that period, and then we kind of basically started to trend that way for the Asian session at night, but then we just shot up there, guys. And then obviously we had that weaker manufacturing PMI number that dropped at about like 9, and then we just shot up a little bit from there. And then obviously we're definitely shooting up a lot, guys. We're definitely shooting up. Then we had the jolt situation. That was a terrible number. We shot up a little bit more there. And then obviously we had the services here. Weird part about how today played out we actually had a strengthening dollar. I think everybody was just getting out, taking profits from that nice run up. So had an inverse effect to what actually happened. About 9 p.m. Central Standard. I'm sorry, 9 a.m. Central Standard, 10 o'clock Eastern. The ISM service PMI dropped. It was a negative. It was a softer than expected number. Typically, we'll have the dollar weaken, but it actually strengthened there. And I just think that people were selling off, and they were kind of following the trend from the night of the dollar getting somewhat stronger. And also, you basically had too much going on there to where there was a lot of strengthening happening, and people were just kind of getting out of the position. Also, I think the interest rate decision from New Zealand kind of tipped the scale for a stronger dollar. You would have thought it would have been the inverse, but the fact that it was a very dovish hike kind of had the sentiment already made, and then we kind of just sold off there, and the dollar got stronger there. The dollar is not probably going to end the week stronger. That's probably for sure, unless somehow we have a blowout number on Friday, even though nobody will be virtually trading, and the dollar index shoots the other way. But it was a very volatile week for the dollar as a whole. You guys know about the BRICS situation. We did discuss that a little bit. So that is adding a little bit of pressure as well too. So we'll just have to see how things develop. Where I see it going for the rest of the week, probably in this narrow range. I mean, we're kind of consolidating here. If you can see, for the most part, we kind of having some uptrends here on the 1 and 5 minute for sure, 15-minute maybe. But overall, we'll probably see probably an uptrend going forward on a 1 and 4 hour, and I'll show you guys a little bit about that later. But all in all, guys, I appreciate you guys taking a look at this. We'll get you now over to the metals market. Let's talk about XAU/US dollar. Let's talk about that. Gold breached that $2,000 psychological resistance level, guys. Absolutely bananas. Can't believe that occurred. Thought that would be a huge feat, huge thing to tackle. But a lot of people pushed it up with those softer numbers. And then obviously you can see this nice little 1 hour candlestick. I almost missed this trade. I actually have indicators for a lot of stuff and scanners for a lot of stuff. I almost missed this guy, but I did take part in it kind of midway up the stream here and was able to profit a little bit. I did that again, guys, with my demo account. I don't trade this week just due to all the volatility and lack thereof. So I just practice. I keep sharpening that pencil for when next week, which I call week 2, I'm ready to go. I'm hitting the ground running. So basically, guys, as you can see here, we did get a little bit softer here at the end of the trading. And again, that was people taking profit from the huge run up from the start of Monday to Tuesday. And again, this is a huge uptrend. I'm not very bullish. I'm not very bearish on gold right now. I think the bulls are going to have their way. It was kind of muddling the line between both for a little bit, but breaching that 2,000 level is huge, and if it hangs its hat above that for too long, it has a chance to move up there as well too. And also, that was just the beginning of economic data. We're gonna get, as the months go on, progresses, we're gonna get retail sales. That's gonna be huge since we're majority consumer driven economy. That's not good. We're gonna possibly be looking at a May pause, guys. If it is a hike, it will be probably the Fed will be by themselves, and there will be a huge divergence between what the market is doing and what the Fed's doing, guys. We got treasuries just pulling all the way back on the yields. We got the prices going up. So this is a clear divergence between the two if we see things play out like it possibly could. But yeah, guys, where I see possibly going, probably hanging his hat above the 2,000 mark to finish out the week. I think that'll be a huge milestone. We haven't seen these type of numbers for 12 years. So we'll definitely take a look. And then I also want to show you guys silver real quick. Silver had, on a percentage basis, the highest run up, guys. I mean, it literally was the 23 mark, just shot up like it was nothing. Hit that 25, I think 50 at one point. Let me see here, 25.10. Yeah, at one point it was hanging his hat. I was trading a little bit last night practicing. It was about the 25.10. Then it pulled back and I got out a little bit. That level, that $25 level is psychological, just like that 2,000 level. It got as high as like 50 before, like 12 years ago. But again, that was when we pivoted as well. Could it reach those heights now, possibly, but I'm not really sure. There's just a lot going on. But I will keep you up to speed as we go along, guys. But yeah, that's pretty much how the metals played out. Let's get you guys now over to energy. We got to talk about that huge spike coming into the trading week. So I'm going to show this scanner here. We got the WTI hanging its hat 80 spot 19. This is a psychological level as well too. It's kind of a median level. You know, we typically don't like to get above that. Prices start to get a little bit too high. If you look at the gasoline national price, is $3.02, which is not bad. That's not a bad price at all. So as you guys can see here, we had, you know, Saudi Arabia announcing what they announced, and we had that huge upswing, guys. A huge, nice little candlestick there. Very volatile candlestick if you're trading that, because you can kind of have a little bit of back and forth, and depending on how much leverage you have, could kind of ruin you. But yeah, basically, guys, and then we've just been hovering around here. We have not had a lot of period of back and forth. Even with some of the catalyst positions, we've actually had the position go the opposite way. I think why we're having that negative correlation is because it's becoming clear with the softer numbers that there won't be a huge demand for oil like that, and that's why I think we might pull back slightly below the 80 mark, unless we start to get a more cutoff position from supply. Right, everything is supply and demand, despite what the market forces might like. It still does come down to what's being used as well as traded as well. It's kind of 50-50. So we'll definitely take a look at that going forward. I'll keep you guys up to speed on the week ahead for WTI as well too. And again, guys, join my channel. $5 a month, guys. I mean, you can barely buy a McDonald's meal, half of a McDonald's meal for $5. This is very important for you to gain a better understanding, as well as join my Patreon. I will be posting very general stuff for the $5, and then I'll be posting, more precise things for the $25. You're definitely going to get your money's worth. So take a look at all of this, guys. Let's get you guys now over to BTC/US dollar. BTC is hanging its stubborn head above the 28,000. Almost tried to breach that 29. I can't believe it. I thought for sure this guy would have been pulled back a little bit because it had a nice little run up there. I told you I made about 15% off of a trade a couple weeks ago. And the fact that it pulled back, guys, I mean, it pulled back a little bit again. I'm clear as day illustrating what happened. We had that sell-off. People are pretty much done. There was 2 trading days. Tomorrow will be, for some people, they get involved with the religious holidays kind of early, as well as there will be Passover as well too. So, guys, we don't get super religious here, guys, but it plays a huge part of liquidity, and if the institutional people are there. We will talk a little bit further about where I see this going on the week ahead, guys. Let's get you guys now over to the dollar index. Dollar index, unless somehow the dollar just gains a full dollar here on the dollar index, right? Moving up that full dollar, maybe it'll hang its hat about the 102.50 level. And again, we'll talk a little bit further, guys, but I think it'll probably end the week in this consolidated pattern, just this uptrend here. It'll probably gain a little bit with not a lot of people trading it out of its place, so to speak, with the risk sentiment being off because nobody will be there. We might get a little bit of a run up to maybe the 102.50 mark, or we'll just coast here right at that 102 no. So we'll have to see how it plays out, guys. Let's get you guys now over to the stock market. I want to talk about a couple things there. Stocks in today mixed. They couldn't make their mind up on what they wanted to do. So one thing that we're noticing here, guys, is now the Dow, normally bad news is good news for the stocks, but what they're kind of considering now is if things slow down too much, it might actually impact their earnings, right? As well as their outlook for their businesses. So maybe that's going to be the reason why we're pulling back a little bit here. We're still got that VIX below the 20 mark there. And what we love to see is that VIX below that 20 mark, which is very good, guys. But where we see stocks go from here, we might see a sell-off. I made a little bit of money on a put option earlier that, we'll get into a little bit later here. But yeah, guys, I mean, it definitely is a crazy situation to have happen. But there is a pivotal point where we do see that sell-off do occur with the realization that especially if rates stay higher for longer, as well as stuff, getting bad as far as the weaker numbers. So yeah, guys, all in all, I appreciate you guys joining me. Definitely crazy times. The weaker data is coming in. We got metals pushing up. We got the WTI pushing up, commodities pushing up, and we got the dollar getting a little weaker here, guys. Plus, we got the BRIC situation as a backdrop in the background. So we will watch how things unfold. Again, guys, I told you, keep the powder dry. That's what I'm doing. I think that's pivotal right now because, again, capital preservation should be your number one strategy. Everything else is possibly making money. Keeping the money is making the money. So I appreciate you guys for joining me. Please join the actual YouTube page. For $5 a month, guys, I mean, you can't beat that. As well as either the $5 on the Patreon as well, or the $25 to get those key insights on what's happening day by day. I'll probably post on there a couple times a day and maybe once or twice a week on the $5 page just to kind of give you guys a little bit of what's going on. But all in all, guys, I appreciate you guys joining me. Please like, comment, share, subscribe. And as always, in order to be profitable, one must have the knowledge and insight about the next trader position to. You already know. Stay ahead of the curve, guys. I will talk to you guys on the week ahead video in a few days. Happy trading.